Hello and welcome to Livewire's Buy, Hold, Sell. I'm Selby and today we're taking a look at 5 stocks investors can add to their Christmas stockings and hold throughout 2024. To do that, we're joined by Eleanor Swanson from Firetrail and Conn from IML. First up today, we have Kelsian Group, which used to be Sea-Link Travel. It operates ferry and bus services throughout Australia, Singapore and the UK. Eleanor, I might start on you. Is it a buy, hold or sell?
So we think Kelsian is a buy, and I'll give you 3 reasons why. So the first is that Kelsian operates in a structural growth industry, which is public transport. So I'm sure you have a lot of people come on the show and talk about, decarbonisation, electric vehicles, lithium miners, but actually the best and most effective way to reduce carbon emissions is by catching the bus. So as a person, if you hop on the bus, instead of driving your car, you're reducing your carbon emissions by 90%. And as a result, governments are investing in public transport infrastructure, and Kelsian's set to benefit from that. The other reason is that Kelsian is defensive. So 90% of its revenue is contracted. A lot of that is government-backed revenue. And in addition, it's got CPI escalators. So, you can sleep easy at night knowing that Kelsian's earnings, you do have really good visibility there. The final one is that the valuation is compelling. So it's trading at about 15.5 times earnings. We see over the next 3 years, 14% EPS CAGR. We actually think, the business can beat those market earnings. There's no contract wins factored in, and Kelsian's got a very good track record of winning contracts. So there's earnings upside, valuation support. We think it's a clear buy.
Okay, over to you, Simon. Its share price has lifted around 28% over the past year. Can it do it again over the next? Is it a buy, hold or sell?
Yeah, well, certainly it was a great buy at $5.50, but at $6.50, I think it's still a buy. It's a solid business, as Eleanor said. It's a really good management team. We really like the no fare box risk and the inflation indexed wins that they can, or the protection in their public transport business in Australia. And as Eleanor said, there's a real trend to electrification. And I think they've demonstrated the ability to bring state governments and councils along on that journey. So a real key IP. And then they're all aboard acquisition in the US, which is the recent addition to the portfolio. Recent update is that it's performing, well. Not as contracted as in Australia, but they've got really strong operators in each of the regions they operate. They own the depots, which puts them in a really big position to continue to win more work with large tech companies or in the LNG sector, which is growing strongly. So strong management team, balance sheets reasonable, and that inflation protection in Australia is a real key part of it as more of these tenders come up for renewal or new areas are put up for tender.
Okay, we're kind of keeping with the decarbonisation theme with this next stock. It's Nexgen Energy. It boasts what could become one of the world's largest and cheapest uranium mines. Simon, staying with you, is it a buy, hold or sell?
Yeah, it's had a good run, so it's probably a buy to / hold, to be honest. But it is, it's a tier 1 asset. It's an amazing deposit. And I think if you want to own mining stocks, you need to own the best quality ones. So it's a hard rock, and a simple mining process. So it's not in situ leaching, which a lot of the Australian operators are. Obviously, it's not in production yet, which is a fair way away. So that's always the risky bit. But I think this is an asset ultimately will be owned by one of the tier 1 majors. It's in a tier 1 jurisdiction in Canada as well. So, we recently got some more approvals. We like it as a play on the uranium thematic, which, it's had a good run and that sector has had pullbacks. So I'd be cautious a bit at the moment, but it is a really good quality asset base.
As Simon mentioned there, it's had a really good run over the past 12 months. Its share price is up 56%. I wish I invested in that stock a year ago. Eleanor, over to you. Is it a buy, hold or sell?
Yeah, we still think Nexgen is a buy, and the reason for that is we're very positive on the uranium price, even though it's had a fantastic run over the last 12 months. And the reason we're still positive is if you look at the supply-demand outlook for uranium, on the demand side, you've got this global recognition from countries that they're going to start needing to invest in nuclear reactors if they're really going to, progress towards that net zero target. In addition, if we think about, the geopolitical risks in the world at the moment, from an energy security standpoint, nuclear is really fantastic. It's got great ability to be transported as well as stored. So if you want to shore up your energy security as a nation, it makes sense to go nuclear. So the demand backdrop's strong. On the supply side, there's actually very limited excess inventory. So as a result, we think the uranium price can grind higher. And then, as Simon's mentioned, Nexgen is super high quality asset, 40-year mine life. The mine is situated in Saskatchewan in Canada, which is actually a very mining friendly jurisdiction. So we think it's a fantastic way to play the uranium thematic through Nexgen.
Okay, last up today, we have building products producer CSR. Eleanor, last one for you. Is it a buy, hold or sell?
I'm feeling very positive, clearly, because it's another buy for us. So CSR, 80% of its earnings are in the building products segment. So I think things like fibre cement or plasterboard. And what we're seeing in terms of kind of the market concerns around CSR is just where we are in terms of the housing cycle. And if we look at the backlog in terms of detached housing, there's still about 100,000 homes that need to be built. And what that means is moving into next year, you've still got quite strong visibility on earnings. In addition, the industry structure in building products has improved. And as a result, we're seeing a lot of the players in that industry put through double-digit price rises. The demand backdrop's still pretty good. So we're seeing customers are accepting those price rises. And as a result, we're expecting CSR's EBIT margins to remain higher for longer. So we think there's earnings upside there. We really like it. So yeah, it's a buy.
Its share price has risen around 19% over the past year. Simon, over to you. Is it a buy, hold or sell?
For us, it's a sell, and we're very cautious on the cyclicals. And we think, with inflation's, despite today's print, there's pressure on the interest rates to go up. Housing starts have turned down, and so I think they're down 10%. They are leveraged to detached housing more than the apartment market. So we just think it looks pretty expensive up here, and margins are elevated. So we're quite cautious on CSR.
Okay, we asked our guests to bring along one stock that they can buy and hold in their Santa stockings throughout 2024. Simon, what have you brought for us today?
Yeah, Ali, we really like Australian Clinical Labs, or ACL. It's a really strong business. There's only really 3 national pathology operators, Sonic, Healius and ACL now. And we think pathology is a really attractive industry. Certainly if you look at the share price performance over the long term of Sonic, it's a very recurring business, generates good cash, and the ability to grow through bolt-on acquisitions is clear. Sonic's been a great performer many years. We think ACL has some really good management. They've got some really good IT systems, which was demonstrated through COVID. When volumes grew, they were able to generate really good cash. And as those COVID volumes came off, they were able to get their costs out of the business quite quickly compared to some of the other operators in the industry, particularly Healius. So, we think it's really well positioned now as we get more business as usual. People are starting to slowly return to normal habits. It's taking a little bit longer, to be honest, than we would have thought. But as GP attendance has normalised now, we're seeing pathology volumes return to that sort of mid-single digit growth. Balance sheet's very strong, only 40 million of net debt, and we think that positions them well for either bolt-on acquisitions, or if the ACCC may approve of the merger with Healius at some stage, maybe those two get together, which is could be a good outcome. But if not, they could be a target themselves, or they can just proceed with the continual bolt-on acquisitions to add to their growth. It's 13 times, yields 5.5%. Looks very cheap. And we think it's really well positioned for the next 12 months.
Okay, over to you, Eleanor. What stock would you buy and hold throughout next year?
So we think New Farm looks really interesting heading into calendar 24. So there's 2 things going on with that business. First, you've got the crop protection business, which is a cyclical business. The volumes in that business are very much linked to kind of seasonal production globally. And what we're seeing there is, inventory has built over the last 12 months. That's starting to unwind. Margins have been, pretty compressed. However, New Farm has managed to take share. And we believe that the current $460 share price is a fair reflection of the valuation of the crop protection business. What's not being factored into New Farm's share price is new seeds. So New Farm has put out some pretty ambitious targets in terms of the new seeds business. They're hoping to generate 500 to 600 mil of revenue in FY26. And we saw at their FY23 result really good signs that they are tracking towards those targets. They've actually put out firm guidance specifically for one product, which is the omega-3 canola product in FY24 to generate 60 mil of revenue. And they're expecting that to double into FY25. So we believe, there's significant upside in New Farm if it can start to demonstrate to the market that they can execute on the growth plans for New Seed.
Okay, well, I hope you enjoyed that Christmas special of Buy, Hold, Sell as much as I did. If you did, why not give it a like? Remember to subscribe to our YouTube channel. We're adding so much great content just like this every single week.